So what we're trying to do is, back to the tip of the iceberg, is help them manage the dollars and cents of their life so that over time they're getting progressively wealthier to be able to put that to work, but to also sort of help them unlock the ability to do other things in society than just make money. So that's sort of where the rich beyond money comes from.
Welcome to the Bricks and Banks podcast, where real estate meets real wealth. Whether you're building from the ground up or stacking your paper to the ceiling, Steph breaks down property power plays and money moves you can act on. From first-time buyers to seasoned investors, this podcast is your blueprint for financial freedom through property, investment, and business. Subscribe now. It's time to build your future. This is Bricks and Banks with Steph.
And we are live. Hey everyone, welcome to another amazing session of the Bricks and Banks podcast. I am your host as always, Stephanie. And today I have with me an amazing guest. His name is Peter Culver. He's joining us all the way from Connecticut, US today. He is a co-founder and of the Freedom Family Office and Wealth Tribe. Join me in welcoming Peter Culver to the pod. Hey! That's like a drum roll.
All right.
Peter. How are you doing? We're just talking about the weather because the weather is just draining. How are you over there?
I'm good. As I was mentioning, we had some very hot weather last week, but it's reasonable now. So that's fine.
You're lucky yours is reasonable. Ours, we're just melting here.
Oh, no, I know. I've been reading about it in relation to the tennis tournament, right? It's hot at the tennis tournament.
Yeah, it's hot. Everyone is
hot everywhere, I guess.
Yeah, they're just scrambling to stay hydrated and keep cool.
Agreed.
So today on the pod, I titled today's episode on Beyond the Exits, Mastering Wealth Strategies and Mindset Shifts for Lasting Financial Freedom with Peter Culver. So I'm intrigued, Peter. Can you tell me your story? How did you get here? Because you're like this. I would say that this is like a mastermind session. I just want to pick your brain and basically train your brain. So how did you get here? Can you just tell your story?
Yeah,
growing up for you, your career, and how we got here?
So I grew up in the States, went to college, went to law school. So I was originally trained as a lawyer. I practiced law for 12 years. And then I had...
That's a lifetime.
That's enough, for sure.
Definitely.
I may feel the same way about law that you do about accounting, but anyway, I escaped somewhat accidentally, which is I had a client that decided to start a financial services firm. And the beginning of that was I was the lawyer for the project and did all of the legal work, forming the entities, raising the money, all the regulatory things. And to make a long story short, it was sort of a bootstrapping operation. And I don't think they'd really thought through very well, if they got this company off the ground, who would run the company? So they asked me to do it, I think in part because I was the one who had put it all together. Although, to be perfectly honest, at that time, I didn't really have any experience in financial services. So initially, I literally sort of moved across the street from my law office to the law office of this wealth management firm. And I just found almost instantaneously once I was there, I knew I'd never go back to practicing law because it was a lot more fun.
Okay.
So
and it was bringing in the bucks.
What'd you say?
So it's bringing in the big bucks, in it.
Yeah, well, I don't know about that, but I would say, I don't know about big, but bigger than being a lawyer, ultimately. So there have been a kind of series. I guess I've started 3 different financial services companies. Usually the pattern there was we would sell it to a bigger financial institution.
Okay.
So in between, I worked for sort of 2 big financial institutions that had bought the companies that we had created. The last one of which is a pretty well-known institution here in America called Bank of New York Mellon.
Oh, I know that. BNY.
Correct. Exactly right.
Yeah, I know it.
So about 7 or 8 years ago, I'd had enough fun doing that. So I started my own business, which is sort of the precursor of what exists today. Okay. I had a client when I was at BNY Mellon who's my partner now. And so I was working for a big financial institution. He had his own little RIA, and we were both eager to create something new. So that's the origin of our company today. The first company is one of the ones that you mentioned called Freedom Family Office. That's
Okay.
what's in the United States known as an RIA, Registered Investment Advisor.
Mm-hmm.
And in the beginning, that was the only company that we had, and it did investment management, financial planning, tax consulting, insurance, and estate planning and exit planning, all under one roof.
Okay.
About 2 years ago, it started to make sense for a bunch of different reasons. Some are financial, some are regulatory, to have the investment company separate and just have it do investments. So that's Freedom Family Office. It still exists, but we
Mm-hmm.
created the new company called Wealth Thrive, which is a
Oh,
consulting firm as opposed to an investment management firm.
okay.
A lot of our clients, well, almost all of our clients are business owners. And we
Mm.
like to say about them, they're all rich, but most of them don't have any money because all their money's in their company. So they're not good candidates for investment management, at least until after they sell their business. And so
Oh, okay.
a lot of the work that we actually do is advisory. So that's a better platform to work with those clients. So we now
Mm.
have a team of investment people that really run the investment company. And myself and my
Okay.
partner really run the Wealth Thrive advisory practice.
Wow.
So that's 40 years in 5 minutes.
Felt like it's a whole lifetime. You had a lifetime
Oh,
in
yeah.
law. You had another lifetime managing a business. Then you're now living another lifetime running your own company, splitting it into parts. It's
Yeah.
crazy.
Yep.
And so, do you specifically focus on just individuals, or do you also advise businesses and companies? Because I know that these
So,
individuals have businesses.
yeah, I mean, all of our clients,
Mm.
with a very few minor exceptions, are entrepreneurs. So,
Okay.
and they will inevitably have one or more business entities, LLCs, S corps,
Yeah.
partnerships, sometimes C corporations. And in that world, there's a much greater overlap between the client's personal affairs and the affairs of the businesses, in part because most of those entities, with the
Mm.
exception of C corps, they're pass through entities, right? So there's a
Oh, okay.
constant exercise of the money gets collected in the entity, and then how do we do a bunch of clever things so that they don't pay a lot of taxes when it flows out to them. So
Mm.
we're involved in advising them both about things they can do in their business from a financial perspective. We don't tell them how to run their businesses, and then in their personal lives.
Amazing. What inspired you to dedicate your career specifically to helping entrepreneurs transition from business success to personal wealth? Why are you so interested in them making it on your personal income side of things?
So I think there are a couple of concepts there. So we like to say this would be true, probably not just in America, but that there are two great ways to get wealthy in America. One is start a business, grow it to some significance, and either it makes a lot of money or you decide to sell it someday to
Sell it.
somebody. A second really effective way to increase your wealth is to pay less in taxes. And most people don't appreciate really just the math of that, of how significant it is. Federal
Mm.
income tax rates in America, if you're in the highest tax bracket, are 37%. If you live in New York or California, you're going to add another 15% to that. New Jersey is another 10%, Connecticut 7%. So
Okay.
at least the high income earners could be
Mm.
paying, before we start helping them, 40 to 50% of the income they earn in
That's
taxes. So
taxing.
if you can keep that money and invest it in your business or some other kind of investments and compound the growth of that, I mean, if you
Yeah.
just did stupid math and said if instead of giving 50% of your money to the government, you kept it yourself, at whatever rate your investments are growing, you double your wealth over time. So we
Definitely.
do a lot of work with clients advising them how to mitigate taxes both in their businesses and in their personal lives, and there are many ways to do that.
Oh, okay. So, do you just have clients? Do you just cater to clients in the US, or do you have clients across Europe, other countries?
So we have a few outside of the United States. I would say
Okay.
I would say we are tax experts about the
Mm-hmm.
taxes in the United
Okay.
States,
Yeah, that
but
makes
we're
sense.
not tax experts about taxes in other countries. Now, we get involved, the most common way we get involved in that area is either someone's coming from another country to the United
Hmm.
States
Okay.
and
Yes,
they
that
may
would make
not
sense.
understand how acquisitive the United States is in taxes. So, the
Yeah.
basic premise of if you're in the United States wants to tax you on your worldwide income. So,
Mm-hmm.
there are a lot of situations. I had a client a few years ago. He was from Spain. He had started a successful business in Spain. He and his partner decided they should replicate that business in the United States, but they really didn't understand anything about how the taxes on that might work in the United
Yes.
States. So that's a reasonably common occurrence. I've got a guy right now moving from England to the United
Hmm.
States. And then sometimes it will go in the other direction. I think sometimes people think, oh, well, I'll just move to some country that doesn't have taxes and I won't have to pay any taxes. It doesn't necessarily
It doesn't work like that.
work
Yeah.
like that. So we have another client who grew up in the United States. He's of a Malaysian background, but he really grew up in the
Okay.
States.
Hmm.
If you do it right, it turns out Malaysia is an interesting tax jurisdiction. And he has worldwide businesses. So not all his businesses are in the States. And that's a good
Okay.
place for businesses in Southeast Asia. So we're just making sure he doesn't stub his toe as far as America is concerned. Yeah.
So I'm interested in the stories of your the people you advise. So could you share a powerful before and after story of someone of a client you've advised, highlighting their transformation from operational leadership to wealth building legacy?
Sure. So I'll start. I would say a common occurrence that we see
Hmm.
is that business owners don't prepare well enough in advance to sell their business. And that
Oh.
has kind of two components. One, a financial component. And
Hmm.
what we see happens a lot is business owners get kind of dragged into selling their business for one of two reasons. Someone calls them on the phone and says, hey, Stephanie, I hear you have this great fintech business and I'll give you 10 million bucks for it. And your heart starts to beat and you get excited.
Yeah.
But it might be that your business, I don't mean yours in particular, but the
Hmm.
business owner's business might not be in the optimal position to be sold. And I'll come back to that in a minute. So we
Okay.
help them get ready to sell, execute a sale. But the other thing that they don't spend very much time on is, well, if I sell my business, what am I going to get out of it? And
Hmm.
oftentimes they're surprised that, here's what happens is if they're paying attention a little bit, they know, let's say most businesses in America are sold on a multiple of EBITDA. That's kind of the formula.
Yeah, makes
So
sense.
they know what their EBITDA is. They do a little research on Google, and fintech companies sell for 10 times EBITDA. So they have some number in their head. Well, usually that's a very kind of average, middle of the road number and may not be an accurate number for their business. The second thing is they start to think, oh, well, my business is worth $10 million. So that means the day after the closing of the sale of my business, I'll have $10 million in the bank account. And what they're not thinking about is number one, taxes on the sale of a business. Now,
Hmm.
capital gain taxes are not as bad as income taxes, but they're probably 20 to 30%. So if I think in my mind I have a business worth $10 million, I might have to write a check for $3 million in taxes. And then I think they tend to think, I figured out what my business is worth, and that means the buyer is going to pay me that number. Well, that's not usually the case. There's a negotiation about the price. So you need to be very thoughtful about what is the life that you're trying to build after you sell your business, and then sort of reverse engineer. If I want to, after taxes, have enough money. So that's part of the preparation that we do with clients is part preparing the business for sale. And the other part is preparing sort of the individual's financial plan so that, the day after they've sold their business, it has kind of two parts to it. One is this financial part, that they've received enough money to live a comfortable life afterwards. There's a whole nother sort of quality of life aspect to this, because what a lot of business owners don't appreciate is if they've started a business, they've grown it to some significance, they're the CEO, sort of their ego and their psyche is all wrapped up in the business. And when they sell their business, all of that is going to go away. And there are a lot of statistics that, especially business owners who don't plan for whatever their life is going to consist of after the sale, they end up regretting selling their business because their identity was so wrapped up in it. So we try and help them navigate the dollars and cents, but also that kind of emotional piece of it too. If you think about it, if you own a business and you're the CEO, you're in control, you make the decisions, all that kind of stuff. If you sell your business, you have money in the bank. You probably want to invest it, but you have a lot less control over the value of your money than maybe you do when you own a business. So that's a big transition for people.
I like the fact that you always emphasize on the concept of living rich beyond money, because essentially what you do is to coach people who have already built businesses and advise them on turning these businesses into legacies, or even if they're exiting these businesses, you teach them on the appropriate way to do so. So what does living rich beyond money mean? What does it look like for an entrepreneur?
Yeah, so when we explain that to people, we have a little image, but I think if I talk it through, you'll understand it. So the image is an image of an iceberg. And everyone knows the old thing about an iceberg, which is there's less above the surface than there is below the surface. So in our mind, what's above the surface is why people initially contact us. And that generally falls into kind of three categories. One is tax reduction. That's kind of our main specialty. Everybody wants to pay less in taxes or wants to learn about how to pay less in taxes.
Yeah.
Some people, they start a business, they grow it to some level, and maybe that business and their own wealth start to stagnate, and they feel like they can't get to the next level. So, and taxes can play a role in that. So we help them with that. Yeah. And then one thing that a lot of business owners at least think about is, okay, I have a business now. It pays me. It gives me distributions. It covers a lot of my personal expenses. But if I sell my business, I got to figure out another way to cover all those needs. And that's what we call passive income generation. And so what we're often coaching our clients to do is don't wait until the day after you sell your business to build a system of passive income. Start now. Buy some real estate, have a second business, have an investment portfolio. Now, those three things are the tip of the iceberg. If this was a psychology class or whatever, that's the presenting problem. What occurs is when we get into a conversation with them, there's more going on. And that, I think, if they get a business that's at least basically stabilized, part of the reason a lot of entrepreneurs start a business is because of the freedom that being your own boss gives you. There are pluses and minuses to that.
Yes.
But I think a lot of them are looking to build a financial system that gives them all the financial support they need and enough not to have to worry about it. So they're looking for financial freedom. The second one is business owners, the successful ones. They're really good at running their businesses. Often, because they work so hard at running their businesses, they're not so good at running their own personal finances. So they're looking to kind of have the same level of control and success over their personal finances as they may have in their business. So that's what we call personal success. And then I think if they can get those things working well, all people don't want to just spend their whole life making more money for themselves. They want to find some way to give back. And that could be a religious community, another charity, a school, whatever it is. And so we call that higher purpose. So what we're trying to do is, back to the tip of the iceberg, is help them manage the dollars and cents of their life so that over time they're getting progressively wealthier to be able to put that to work, but to also sort of help them unlock the ability to do other things in society than just make money. So that's sort of where the rich beyond money comes from. Money's great. It provides security. We go through an exercise with our clients, brand new clients, which we call Ideal Life. And we have them do a couple of exercises. They're actually kind of fun. They don't take a lot of time, but the general theme of it is, close your eyes, imagine it's 5 years from now or 10 years from now. What does your ideal life look like? Now, many people might think, well, if you ask an entrepreneur that question, they'll say things like, oh, I want to be worth 10 million, or oh, I want to be worth 100 million, or whatever it is. What's interesting is that's not usually the way they answer the questions. The things that they mention are sort of, where do they want to be living? How do they want to be spending their time? Who do they want to be with? Maybe who they don't want to be with anymore. So, it's a kind of version of begin with the end in mind. So we want to help them get clear about where they really want to be headed. And then I guess our technical role is to help them organize their finances and organize a pathway to get from where they are today to that ideal life. It's their job to define that. And then we plot that out and do financial planning and investment planning and all those financial things, but also try to make sure they stay on track in terms of what the life they're really trying to create, which isn't just a financial life. It's a more holistic kind of concept.
Holistic, balanced life. Yeah. I know that requires a lot of mindset shift because like the exercise you mentioned at the start, everything starts from the mind. So what would you say are the most common mindset shifts entrepreneurs must embrace to successfully transition from running a business long term to wealth management?
Yeah, so I would say, I think the biggest thing they need to, what happens to a lot of them is they have kind of withdrawal. They're so engrossed and so time consumed by their business. And if they're not really building a life that has other aspects other than the business, and then they sell the business, there's like a huge vacuum in their life. Some people have described it as like when their last kid goes off to college or something like that there's an emptiness there. So, and that emptiness isn't just going to be filled up with money. That'll at least mean that you're not worrying about whether you have enough funds, but you need hobbies, activities, other interests, which if you start to develop those beforehand, then the transition is much more seamless. I think they need to, again, usually if they've started a business and they're the CEO, they feel sort of like master of the universe in that little universe, or mistress of the universe, and that's their universe. Well, if they sell their business, that universe is gone, and it's like the guy or lady who used to walk into the office every day and they had a neon sign on their head which says, "Here comes the boss, here comes the boss, here comes the boss." Well, they sell their
Yeah.
business, they go
But
to Walmart, nobody knows who they are, So I think
no one cares.
that's a shift that they have to. Some people welcome that because, with all of the wonderful things about being the leader of the business, there's a lot
Mm.
of responsibility that comes with that.
Decisions that need to be
And
made.
so, it's fun while it's fun, but it's not always fun forever. And you just want
True.
to make sure that you start to build something that can replace. It's just they're so consumed by their business, they don't think about that. So they need help. Again, that's the part of getting ready for life after business sale.
Hmm.
As a person, there's a whole nother process of getting your business into the optimal position to be sold. That's a whole nother
Yeah, that's
process
yeah,
that we
exactly.
work on
Getting
with
it ready
them.
to be so. Oh, and I know you mentioned earlier that a lot of entrepreneurs they overlook that part of having a passive income stream. So what would you say is the biggest and most overlooked wealth building strategies that they need to start considering early enough?
Yeah,
And
so
how early is early? Are we saying like 2 years to the sale? Are we saying like 6 months to the sale? So let's just talk about that timeline as well.
I think there are two parts to that. One,
Mm-hmm.
we would say just in terms of generating other streams of income, never too soon to start because you'll build up more over time.
True.
And I would say in the world we work in, the most common ones are a traditional investment portfolio, so stocks and bonds and things like that. That's one way to generate income. A lot of our clients, and we're in that business too, we have a third business which builds and manages multifamily housing. So income
Okay.
producing real estate is another great way. And that while you're running a business, you would probably just be a passive investor in real estate. So that's a great way to generate some income. There's a investment category here in the States that's popular called private credit. So there are a variety of structures that lend money to people who either can't get a loan from a bank or they don't like the terms from a bank. A lot of
Mm.
developers do that. The income streams are typically higher than traditional, say, bond and stock investments. So what we're trying to do is get them, subject to their interests, subject to their comfort level, to try start at some point as early
Yes.
as possible in a way to take some of their net profits and begin to allocate them to
Mm-hmm.
those other areas. And it's never too early to start to do that. Now, if you're talking about the actual sale of the business, we would say typically you should start thinking and strategizing about that as much as 3 years before the sale of the business. Typically in America, if you have a business of not massive size, but some substance, it'll probably take a year from the day you decide to sell your business until you're done with the process.
Okay.
What happens in that interim period is, if you're going to sell a business, often a good mindset to have is, what if I was the buyer? What would I want if I was the
Mm-hmm.
buyer? And there are a couple of common things, which is one, a buyer wants to buy a business that's profitable, number one. Number
Yeah.
two, has been profitable for at least several years, and ideally its profit is going up. So that's number one, sort of a record of profitability. This may sound counterintuitive, but what buyers really want is a business that can run without the person who's running it now, because
Yeah.
it won't make financial sense for them if they buy the business and then they have to keep paying the same guy
Paying
all
the
that
owner.
money to run it.
Exactly.
That's one of the biggest transitions is to a lot of entrepreneurs in the beginning are both the owner of their business and the operator of their business. And
Yes.
what they want to try and do for two reasons is to begin to move from being the owner and the operator to not being the operator and being the owner. So there's a whole process of kind of putting in place a team of people who run the business on a day-to-day basis, reserving to the CEO really sort of more time for the strategic thinking and that kind of thing. So we work on that a lot with them. Most buyers are going to want to pour through every aspect of your businesses, your finance, your contracts, your relationships, your insurance. And so being organized about that in the very beginning is important. So for a lot of our clients, we help them build what's called a data room, where they begin to store in a very organized fashion their finances, their contracts, their business processes, all that kind of stuff. And then, not surprisingly, I mean, a lot of businesses, they start up, oh, we got to have some kind of business record. Someone says use QuickBooks, so they use QuickBooks. And that's fine if you have a smallish business, but you're a CPA, you would know a sophisticated buyer wants a higher level of financial statements, right? And not just a balance sheet and a P&L. They want trailing this, trailing that, projections.
Cash flow, equity statements, and all that.
So we kind of work with them on, and another thing that's very common now, maybe you would relate to this being in your business, is simplistically, buyers like to buy businesses that have sort of built-in continuing streams of revenue, sometimes referred to as a subscription business. So people sign up for a year or 2 years or 3 years rather than just a business that sells units of a product or sells units of a consulting business. So if you think of all of that, sort of making the owner obsolete, improving the financials, the transition from sort of fee-for-service to subscription business, there's a fair amount of work to be done to kind of get the business in the right spot. And then in America, at least, at different times, different types of businesses seem to be more attractive to the people that are buying businesses. So there can be good times to sell a business and bad times to sell a business, but you want to be ready, having put all those pieces that I just described in place, so that when it's the right time for you and the right time for your business, then you can kind of strike. So fair amount of work on the front end to ready.
Yes.
That makes sense?
That makes sense. Yeah, that makes a lot of sense. Let's talk taxes, because you mentioned about how people are leaving a lot of money on the table by not considering the tax implication of their businesses, especially when exiting. So what would you say, how would you describe a proactive tax strategy that would serve as a foundational pillar for building wealth?
Yeah, so
what's the common mistake you see entrepreneurs making when selling their businesses, having neglected the tax planning part?
Yeah, so I would say, I think a lot of them just assume, well, either they completely ignore that they're going to have to pay taxes, but I think a lot of them just assume, well, in the United States, there's a tax called the capital gains tax. So if I own a capital asset, a piece of real estate, a business, a stock, and I sell it, I have to pay tax on the difference between what I paid for it and what I sold it for. That's the capital gain. And I think a lot of them tend to assume, well, that just comes with the territory. So I have to account for that. So there are a variety of things that you can do. Again, part of it goes back to this advanced planning. There's some structures you can put in place before you sell your business so that when the sale occurs, you don't realize any taxes. There are also some strategies you can use even after you sold a business if you didn't put that structure in place to mitigate. Again, I can describe a couple. So a strategy that we developed is in the United States, in general, life insurance, the structure of life insurance is a tax-free vehicle. I put money in a life insurance policy and then I invest that money in the life insurance policy. it doesn't pay any taxes. So whether it's I buy stocks and bonds inside my life insurance policy and then I sell them, or I own a building, or I own a business. So we've developed a strategy which enables a business owner to get his business, his ownership of the business inside this structure, life insurance, so that when the sale occurs, there's no tax. And there's some very sophisticated versions of that where not only would you not pay tax at the instant of sale, but if you leave the money inside the structure and invest it inside this structure, there's no tax on the investment and the reinvestment of the money. And another feature of life insurance is if you take money out of a life insurance policy, you don't pay tax on the withdrawal. So that's kind of structuring in advance. That strategy would avoid the capital gains tax. I have another strategy a client is using right now, which is called a deferred sales trust, DST for short. And what happens there is business owner sells his business, but the business owner doesn't get the check. The check goes into a deferred sales trust. And as long as it stays in the trust, you don't pay any capital gains tax if or until you take some of the money out. So I have a client right now, he's selling his interest in the business, but he's going to be hired for about 3 years after the sale to keep working for the company. So he doesn't actually need the money that he's going to receive for selling his interest in the business to live on. So he will put his sale proceeds into this deferred sales trust. And the reason it's deferred is there's no tax until he takes money out. And while it's invested inside that trust, there are no taxes on those investments. And typically, if you do the math and you invest the money the right way, you're going to end up ahead by deferring that tax. It doesn't eliminate the tax, but it does defer it. So that's two examples of something you could do before you sell the business. Now, there's some interesting strategies after you sell a business, which simplistically fall into two categories. So in the States, if you sell a business, you're going to have a capital gain. And generally speaking, if you're the owner, you're going to get what's called a K1. You may know what a K1 from your accounting, but basically it'll say, my cost basis in my business was X, the sale price was Y, and you have a gain for the difference between those two amounts. There are strategies where, in essence, as long as you do it in the same tax year, it can be after the sale, but in the same tax year, you can pursue investment strategies that create a loss that could offset some or all of the gain. So oversimplifying it, Mr. CPA, Mrs. CPA is sitting there and they've got this K1 for the gain. Let's say that's $10 million. We could show the business owner a strategy that from another source would create A1 that offsets that strategy. And then there are a number of charitable strategies. So depending upon whether you give cash or stocks and bonds, something that has a liquid value to charity, or whether you give tangible assets to a charity, you're entitled to tax deductions for that. So sometimes what we do is if there's enough time left in the year, we can show a business owner, okay, back to my example, you had a $10 million gain. There's some interesting ways to create charitable contributions that offset that gain. So best thing to do is start beforehand, because usually we can give the business owner more of a reduction in the capital gains tax. But even if they don't do that, all hope is not lost. And there are things that you can do afterwards to try and mitigate that tax. So that's probably, I spend more of any part of my day doing that all the time, helping people reduce their taxes.
Wow.
So there's a lot they can do. And we like to say, don't take this the wrong way, but they've never heard of any of these ideas from their CPA because
Exactly.
In America, the CPA profession is more of a compliance function.
Yes.
Got to file a tax
You tick the
return, got to file
boxes.
it on time, got to put the numbers in the boxes, all that kind of stuff. No criticism intended. We
Yeah.
tend to describe what we do as tax strategy.
Hmm.
So, and one way to think about that is we want to show a business owner things they could do so that the numbers that they give to their CPA are smaller numbers than the numbers they would give to the CPA if they do nothing. So, but
Okay.
it's a collaborative process. It's just
Mm.
kind of two different mindsets, two different kinds of people that like doing one versus the other, but you need both.
Yes.
Yeah.
So talking about real estate now, real estate investments, it's one of the key areas where we can use as a wealth building strategy, especially in terms of passive income. So
Right.
how would you advise entrepreneurs to strategically integrate real estate into their portfolios?
So I guess there are two ways to do it. We would have a
Hmm.
preference for one of the two. So you
Okay.
can get exposure to real
Yeah.
estate by buying, there's a whole variety of REITs, real estate investment trusts. Those are publicly traded securities. You can just buy those in your portfolio.
Yeah.
The returns tend to be lower than private real estate, and the fees tend to be higher,
Higher.
right? So there's a business world out there of entrepreneurs that develop multifamily housing, shopping centers, office buildings. Not a hard world to access. And those developers are always raising money
Hmm.
for their projects. And back to taxes. So I would say simplistically, two different ways to go. One
Okay.
is you could access that through the public markets,
Okay.
typically in one of two ways. One, by investing in REITs, which are
Hmm.
like mutual funds or ETFs that own different kinds of real estate. That could be shopping centers, it could be apartment buildings, it could be office buildings, it could be single family homes. And generally, they pay some kind of current income return. We think the potential downside to that is the current income, and often the long-term gain tends to be less than in the
Okay.
private real estate market, which I'll describe in just a minute. And the fees tend to be higher.
Higher.
So
Yes.
but they're not as liquid, things like that. Now, we
Hmm.
have a third company, which is an example of private real estate, where we raise money from investors to acquire and operate. And we just do multifamily housing, so apartment building complexes. But those projects probably have current return of 8 to 10%.
Hmm.
Basically, you're getting a share of the income that all the tenants are paying. They tend to have a back end return because at some point, probably the person who's developing that project is going to sell it. And those returns are probably 15 to 20%. And those, if you just took those two numbers and compared them with a typical REIT, those numbers would be higher. The other thing that's great about real estate is it has terrific tax benefits because real estate can be depreciated, and investment real estate often qualifies for what's called accelerated depreciation. So
Okay.
not only are you receiving money, but you're
Hmm.
also getting your share of the depreciation deduction, which offsets some of what would be the tax. So
Sure.
there's a whole world out there. In fact, we wrote a book, my partner and I. It's called something like How to Generate Infinite Returns by Investing in Real Estate. And,
Okay.
if you wanted to make that available to your audience, I could send you a link or whatever. It may
Yes,
even be on
definitely get
Amazon.
the
I think,
link.
yeah. Uh, and I would also tell you in that regard, we wrote a second book, which is all about exiting your business. Actually, quite
Okay.
a tome, but it's all the things that you should think about when you're selling a business, a lot of which we've talked about. And I don't know, did Judy help you set this up? I'll get one of my colleagues. We can send you
Okay.
a
All
link
right. Okay.
and there's no charge for those. We make them I think some of them are available in hardcover if you want to buy the hardcover, but they're like ebooks. And
Okay,
I think
perfect.
it's not like the Encyclopedia Britannica. They're easy reading. You
Yeah,
can read
easy
them.
to read.
Yeah,
It's
yeah.
okay. That'll
But
be
I
perfect for us.
think your audience might find that
That's
interesting.
fun. Amazing.
That's been very successful for us and our clients, having that as another way to invest, say, in addition to just stocks and bonds.
Oh, okay.
Yeah.
Amazing. So someone who has guided many business owners, entrepreneurs into financial freedom, what's your personal definition of success and legacy?
So I'd say a couple of things, which we've talked about a little bit, is so success isn't just about finances, right? It's
Mm-hmm.
success is, and maybe more ultimately, is about building the life that you want to build for yourself, your family, your children,
Yeah.
all those kinds of things. And if you think about it, I mean, maybe some people get lucky, but most successful businesses don't turn out to be successful businesses by accident or happenstance, right? You got to
Yeah.
be
Has to be
intentional
intentional.
about that. And so we're trying, and most business owners are good at being intentional. It's not a hard exercise for them. We're just trying to get them focused on not just being intentional about, let's say, exiting their business, but what they're trying to accomplish as a result of that. And the real
Okay.
result is not just getting a big check for selling your business. It's getting resource to help you go on and live the life that comes after that. So
Mm.
again, that whole concept of ideal life has that, begin with the end in mind. And most people, I don't think their end in mind is they have a big balance sheet or they have a lot of money in the bank. It's that they have a fulfilling
Freedom.
life. Yeah. And the
Yes.
freedom too. Yeah. Most entrepreneurs by nature get that part of it, but they need some coaching to take advantage of the freedom to create what they really want to create. Right. So,
Yes.
yeah.
I love that.
Cool.
It's success is all about freedom, and you have to be intentional about what freedom and what that success means to you, because
Right.
it's relative. Someone's definition of what successful means might be different from yours. Yours might just be to spend more time with your family.
Right.
Someone else wants to have like £1 billion in their account. Who
Yeah.
cares? So what
Agreed.
matters is what's value for you at that point.
Correct.
So that brings us to the second segment. And
Okay.
this is a firecracker segment. I just
Okay.
throw you.
Uh-oh.
I throw you a ton
Do I
of
need to have a cup of
questions.
coffee now or?
No, just gonna take like 5 minutes.
Okay.
I throw you a ton of questions and you hit right back at me.
Okay, that's
Hit.
good.
So the first one, if you could give entrepreneurs just one critical piece of advice, what would it be?
Don't think about just the money. Think about the life that you're trying to build.
Yes, that's the legacy.
Right.
Not just the money, the legacy. So
Yeah.
what's one major misconception about wealth you wish every entrepreneur understood clearly?
I guess it's an outgrowth of the same thing is wealth isn't just your balance sheet or your P&L, right? We do a lot of work sort of helping families work together. So let's say we go from first generation to second generation. And so sometimes we'll ask people, if you think about your family as a business, what's the most valuable asset on your balance sheet? It's the
So
people,
what's the
right? It's the
typical? Yeah,
people,
exactly.
right? It's not the
Yeah.
house you own or the business you
Cars.
own. So you need to nurture that just as much as you nurture your business as a business.
Okay, that makes sense. So what's the boldest prediction you have for the future of entrepreneurship and wealth building in the next decade?
So I would say most entrepreneurs by definition are forward looking, optimistic, positive. So I mean, I would just say in general, I truly think the future's bright. There are always clouds on the horizon. There can be political things going on. Those are kind of clouds. They tend to be short lived. There can be periods of up and down, but I just think it's a law of physics that the world moves forward, right? And I think probably the biggest thing going on right now, which everybody's trying to figure out, we're trying to use it a lot in our business, is artificial intelligence, which
Yeah.
may revolutionize. I mean, many people think that it could be a year from now, You might not even need a CPA. You could just have your tax return done by a machine.
Done.
Now, you'd still
Yeah,
want
exactly.
a CPA to look at it. You
And
would want a
confirm things.
CPA to
Yeah.
file it, but
Mm.
there are a lot of repetitive business processes that can probably be simplified and made more efficient by that. And
Definitely.
every business is slightly different. So we think that'll be revolutionary.
Mm.
We're trying to think about ways. So right now, a lot of the tax consulting work we do Excel spreadsheets and we get on the phone and we meet with people. That probably
Yeah.
wouldn't go away, but we are trying to automate the analytical
Lots of things.
process that we go through. So instead of someone having to get on the phone and talk to Stephanie, they'd go on a website, they'd put in some basic information. We would have built behind the
System.
scenes some kind of algorithm that would give them their optimal solution. So
Yes.
I think that's, anything people are worried, well, that you can, two sides to every coin. I mean, that may make certain professions obsolete or not as lucrative as they used to be.
As used
But
to
the
be,
flip
because you don't
side
need
is
the entire firm anymore. You
makes
just need one person.
right. But what that means is there's huge opportunity
Mm.
for the people who can kind of make a transition from the old world to the new world, right?
Oh,
So
exactly.
just don't get stuck in the mud. So we're spending a lot of time trying to figure AI out, experiment with it, that
Mm.
kind of thing. So I think that could be revolutionary.
What's your favorite productivity tool?
So yeah, it's sort of, it relates to, I'm going to have to give saying this. I used to say, I think the Excel spreadsheet is the eighth wonder of the modern world. But
Okay.
an interesting example. So we have a client who's made a series of real estate investments, and they
Okay.
wanted a chart that compared and contrasted these real estate investments in a number of different categories. How much equity is in the deal, how much debt is in the deal, what's the current return, what's the back end return. So my mind initially thinks, well, I'll get out all the material and I'll build an Excel spreadsheet and compare it. So we took all the data, fed it into, we like Grok a little bit better than ChatGPT, although we use both.
Yeah.
It did the whole thing like in 10 minutes.
That's the power of AI.
And see, I immediately recognize the value of that because that means instead of Peter spending, pick a number, 3 hours looking at these slide decks and putting them all on the spreadsheet, now you still got to look at it and check it and stuff
make sure
like
it makes sense. Yeah.
But that gives me 2 hours that I wouldn't have had to talk to another new client or do something else that would generate new business. So that's very liberating, I think.
Amazing. So what are your summer plans? How do you unwind when you're not so busy helping people?
So a little bit
generate?
of a story there. So
Yeah.
I played a lot of sports in college, and initially,
Okay.
so I wouldn't get fat, I started running as an exercise. So I did that for about 20 years, and then my body wore out. So I switched to less impactful exercises, which were swimming and riding a stationary bike. And that became part of the routine. And then one day in March of 20, whenever the virus was, I went to the gym and the gym was locked. Everything shut down in America quite significantly, and gyms were closed for a long time. So I kind of thought, well, what the heck am I going to do now? And there wasn't really, I guess I could do sit-ups and push-ups in my house. That didn't seem too interesting. So I started walking, and it's just sort of evolved where now I go for about a hour-long walk very early in the morning, right when I get up. I go for another one after I have dinner, and I have found, walking doesn't really mess up your body. It's outdoors, fresh air, sunshine, things like that. So that's just part of my daily routine. I like to read a lot. I'm old fashioned. So I find that, and I spend my whole day on the screen. So the last thing I want to do is like spend another 2
on your
hours
phone.
on the screen,
Yeah.
So I do that. Yeah, those are, and, spend time with family and stuff like that. I don't have any extraordinarily Interesting.
What about, do you have travel plans for the summer, or you're not traveling?
So interesting. We do this summer.
Okay,
The
nice.
weather
Where?
in New England, where I live, is usually, except last week, very pleasant in the summer. So we tend to go away in the winter, either to go to, say, someplace like Florida where it's warm, or my daughter likes to ski a lot. So we can go either to Vermont or Maine or someplace like that, or out west to ski. But this summer, my daughter plays field hockey. The British are really good at field hockey. Maybe the
Yes, I know that.
Nigerians are too. I don't know. And actually, outside the United States, I think field hockey is more of a men's sport, whereas in the United States, it's almost exclusively a woman's sport. So my daughter's pretty good at that. And she's on a team that's participating in international competition in Amsterdam, of all places, at the end of July.
Okay.
So we're gonna go there, and then she wants to go to Paris, of all places. I think she has never been there, and it's intriguing to her, so that's fine. So we'll probably go to Amsterdam for, I think it's like 5 or 6 days, and then maybe to Paris for 3 days. That'll
That sounds
be
like
a
a fun.
nice, yeah. And normally, as I say, we kind of stick around here in the summer. And my daughter's very busy. She's got her sports team. She's studying for the college entrance exam.
How old is she?
She's 16.
Oh, that's nice. She's in a very
You would
pivotal
say
moment
16
for
and a
life.
half, but she's I call her 16. So
She can't wait. She can't wait to leave the pen.
well, it's already happened. So
Okay.
my wife has a more traditional job, which is
Okay.
not as flexible as my job. So I ended up being sort of the chauffeur for my daughter, taking her to school, sporting
Okay.
events, doctors, all that kind, which was good in a way, because it meant every day I had, these little bits of time with her just to kind of check in and do all that. Well,
Nice.
at the beginning of June, she got her driver's license. So now I never see her again. She's just like gone doing her own thing. I'm sort of
Nice.
like the business owner who sold his business. My
So this
daughter,
is nice, and you're stuck.
my
Like, what did I
daughter
do
got her
next?
driver's license and she's gone. So, but that's part of life, right? I mean, good for them to grow up, and she's excited, but it's different. So yeah.
Amazing.
How about
Thank you
yourself?
so much for
You traveling anywhere?
summer. Not necessarily traveling, but I'm going to see my brother in Manchester. So
Okay.
I've never been to Manchester before, so this is going to be like the first time we're going there.
Nice.
And I also plan to go to South Bank later this week. South End, rather. There's this South End pier. It's really nice in the summer,
Nice.
so I want to check it out with my friend this weekend.
Very cool.
Yeah.
Anyway,
I haven't made any major travel plans yet, but I'm working on those. Yes.
Okay.
Yeah.
Never too late. Well, the nice thing about, England, there's so many
tons of
United States,
places to go.
that are not too far away, right? But would be, America's big, and there are lots of parts of it that are different, but it's sort of all the same culture, where you could go to France, you could go to Spain, you could go to Italy, you probably get there in a couple hours and do fun stuff. Well, I hope you have a good summer. This was enjoyable. I hope
Thank you so
worked
much.
out
It's
well
been an
for you.
amazing time having you on the pod today, Peter. There we have it, guys. Peter has basically shed so much light on wealth building, talent business, the tax strategies you need to know. Do well to check him out. So, Peter, how can we check you out on LinkedIn, your website?
So, there are a number of ways, whatever anybody wants to do. So there is a Wealth Thrive website, www.wealththrive.com. There's a host of information. I think there are links to the books, there are YouTube videos, a whole bunch of stuff like that. If someone just wants to contact me personally, I don't mind. They could email me. My email address is peter@wealththrive.com. So we're always happy to hear from other entrepreneurs who might be interested in some of the things. I'm on LinkedIn. We do a lot of posting on LinkedIn. My partner Noah does too. We're trying. It's not my main responsibility. We have a young man who's responsible for that in the company, but trying to expand our, reach using all the obvious social media opportunities, including podcasts. Yeah.
Amazing.
Yeah.
So there we have it, guys. Let's continue to turn knowledge into action and breaks into banks. I've been your host, Stephanie, and this has been Breaks and Banks with Steph. Thank you.
Thank you very much.